Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So another day, another all-time high for the S&P. It's getting to be a common refrain for us here on the morning call and daily recap, talking about all-time highs, but it's the market that we're in. It's going to keep running and not letting people in. This morning's earnings report, or jobs report, was not outstanding. It was below expectations on the headline number. Low participation rate led the unemployment rate to actually tick down, but that's not a healthy sign, as I talked about this morning. The June number was also revised lower, so there was a lot of really negative things in this morning's jobs report, but the market didn't seem to care. Maybe it's the market saying that it expects QE to continue longer without being tapered. Who knows? I don't think this jobs report was bad enough for the Fed to really change its tune, and I don't think it was bad enough for it to change the Fed's thinking in terms of when it tapers QE. And the action today reflected that in terms of gold especially. We'll go ahead and take a look at the chart of the S&P. As you can see, we had that big breakout yesterday above 1700. Woo, we're above 1700, road to 1700, great stuff. Ahead of schedule, Scott talked about S&P 1700 by 2015. Here we are in the middle of 2013, we've already gotten there. Obviously this market's come faster, further than anybody thought, so really impressive action this year. Today we broke above that pivot late in the afternoon. It was a lethargic trading day despite the jobs report. Sometimes a jobs report during the summer can ignite a little bit more action, but today it was really just a quiet session as the report was a little bit mediocre, but it wasn't bad enough or good enough to trigger any sort of unusual volatility, and I think everybody's really waiting on that Fed rate decision. And I think the next month in the market leading up to that September Fed rate decision could be really slow, really choppy, really quiet. I think in these type of situations, it's best to sit on your hands, pare down risk a little bit. If you are an active trader, maybe take that time to take those extra vacation days during August, leading up to that September Fed rate decision, because I think after that, especially if we get some QE tapering, I think it could stoke some volatility and bring a little bit more two-way action to the market rather than just a slow grind higher that we've seen for most of the year and that has returned over the last few weeks. LinkedIn is one we talked about this morning. We talked about the whole social media group, new media stocks in general. LinkedIn had earnings last night. Really impressive report. Gapped up huge and held that gap. Really impressive action from LinkedIn. It's really hard for me to tell you to chase up here, but when a stock gaps up and holds the gap, sometimes it tells you that there's more upside. There are some shorts in LinkedIn. It's not one of those hugely shorted names, but plenty of shorts there that could be squeezed. But as I said, really impressive action for LinkedIn. Really healthy to see it hold the gap. Could see more upside if we get an upper level base from here. Yelp, another one of those ones we talked about this morning in new media. It's not exactly social media, but one of those recent IPOs. We'll take a look at the chart of Yelp. It continued to the upside today. Closed a little bit off its highs as it faded into the close, but obviously huge move after yesterday's gap and go following earnings. But just another example, one of these new media stocks that hadn't really proven itself prior to the IPO in terms of its business model. Yes, it got a lot of traffic, was very popular from users, but in terms of monetizing their business, there wasn't a clear model. And some of these companies are starting to do a lot better job of proving that they do have a business model and they are a viable business going forward rather than just a viable something that people like to use. Apple held up again well today, pushed above its recent mini pivot and a decent resistance level. We take a look at the chart there. You can see, we've been talking about after earnings, it held that gap, which is healthy action, even though in the context of the chart, still got a long ways to go before it reclaims some of the areas that it's broken over the past year. But it broke above this little resistance area that stood around 457 today. So the next one it has to contend with is this area here around 465, 466, which only a few dollars away. So it'll be interesting to see whether we challenge that area next week and get a continuation of this bullish grind up type action. I talked about gold and about how gold didn't really reflect the opinion that the Fed is going to change its mindset based on this 23,000 job shortfall on this morning's non-farm payroll report. I don't think that's going to be enough to make them decide not to taper QE. If they're going to taper QE in September, I think they've already will have made that decision, and it remains to be seen whether they do it. I'm on the fence about whether they do it or not. They've sort of changed their tone a little bit and tied it more to economic performance, and jobs gains have not been big enough to really warrant QE based on the criteria they've been providing for the last year or so. But it'll be interesting to see whether they tug back on the reins a little bit. Just because they taper QE a little bit doesn't mean that easy money's over. Interest rates are going to remain low for a long time. QE will continue, but maybe the pace of purchase will just be slightly less. But take a look at the chart of gold. Pre-market, it got a little boost from that weak jobs report as people took the QE narrative, but it faded, didn't really open higher this morning. We can zoom in to get a little better look. It was a little bit weak all day after yesterday's weakness, traded back down into its 21-day moving average, so it remains in that descending channel. Descending channels can remain descending channels, obviously, until we get a break of the downtrend line that constrains the upside of the channel. So don't cheat. If you want to be long gold, wait for a break out of that descending channel and play it that way rather than trying to cheat and buy it in the bottom end of this range, because it could bleed lower for a lot of August as we head into that Fed potential QE tapering in September. If the Fed does taper QE, it could send gold plummeting again, so that's something to keep an eye on there. TLT bonds also respond positively typically to stimulus that could cause the Fed to extend QE tapering or easy money, whatever you want to say. It was actually stronger than gold today, so a little bit more of a signal, and people put a little bit more, they value the opinion of bonds a little bit more, and today bonds showed you that there is maybe some slightly higher expectations that the Fed might hold off on tapering QE as the TLT, the bond ETF, was able to erase its losses from yesterday. But that was about it for the action today. Like I talked about, even though we did have a jobs report, it was a somewhat quiet session, and that's a trend we could see into August. So less is more in these type of environments. I wanted to say a couple things. First of all, we had a great webinar last night with Mike Lombardo, who's the head trainer of the T3 Live PDP program, which is an education program we have that's designed for traders who are looking to become full-time traders, potentially professional traders. It's a 3-week in-house program that's a sort of a crash course, boot camp, intensive in-house program in the classroom that's followed by a period of mentoring. That's a really outstanding program, like I said, if you're looking to become a full-time trader. So that webinar will be posted. The link will be attached to the article that's below this video that you'll see on the site this weekend. So if you get a chance, watch that webinar. Inquire about the PDP if that's one of your goals to become a full-time trader, because I think it's a really good comprehensive course on everything you need to know to become a professional. Mike Lombardo, the teacher, is a 17-year trading veteran, outstanding teacher. I've been in the course. I help him produce the course. Just to reiterate, outstanding course. If you're interested in becoming a full-time trader, definitely check out the webinar and check out PDP. This has been John Darsie here for your daily recap. We'll see you out there on Monday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.